everyone, and welcome to Share and Review. Today we're going to take a look at Westpac, and I'm just going to show you what has happened with Westpac last week and regarding the share performance. This was a position that I did hold, and I want to explain to you and tell you about the importance of using stop losses in order to protect your capital. So just remember though that this is for educational purposes only, certainly not intended to be personalised financial advice by any means. If you're looking for personal advice, then you do need to go and talk to your own financial advisor. So let's take a look at Westpac. Okay, as you can see, I have got Westpac Banking Corporation up here on the screen, and this is the New Zealand listed company. It is also obviously trading on the Australian Stock Exchange as well. So for the purpose of this, we're just looking at New Zealand. Like I said at the beginning, this was a share that I owned, and I bought it in February last year. So we find that on the chart here. So I bought it somewhere around here, which for me, I can tell you what it was. Yeah, I paid about $26 for that share. And for me, at buying it at around $26, this week or last week, I actually got stopped out. And I got stopped out at $34. So you're looking just below where those two red candles are around here. Okay, you can see the sort of dashed line. That's roughly where I got taken out of the market. So that has been quite a reasonable run. Now, no, I have not captured the absolute high when I have sold my share. However, the trailing stop will never ever get you out at the top of a market. What it does is it protects your capital if the market should fall any further. So the top in this sort of sequence is sort of around that $38.40, 45 mark. So I got stopped out, like I said, at around 34. However, I purchased it for around $26. Now, what I do is when I buy a share, I work out based on my level of risk, how much I'm prepared to risk per investment. And I put a stop under where the share is trading each time. Now, as a share moves up and closes higher for the week, then I move my trailing stop up each time as well. So it's trailing basically just below where the market is moving. Not heaps below, but also not right up close, because as you can see here, we had 2 down days back in September last year, but it wasn't enough to reach my trailing stop. And then the market has basically continued again. We had a 4 weeks in a row through September last year. Again, my trailing stop was able to withstand that. But then this week, I did get stopped out. So a trailing stop is designed that if a share falls, it will, and it hits where your predetermined level is, it means it will sell your shares automatically without you having to worry. Because a big thing for me when it comes to share trading is keeping the emotion out. And so that means that I do not want to be in a position where I'm going, should I sell? Shouldn't I sell? My rules say one thing, but my heart is saying something else. To me, by having an automated stop loss in there, it's binary. And I've already made that decision when I put my stop loss in as to where I'm comfortable in selling that share. So like I just said, it takes out all the emotion. And that's a big thing if you're going to do share trading, share investing, however you want to do it, is take the emotion out and make sure that you have got a stop loss in place to protect your capital. Okay, one share that I have looked at numerous times, and we will look at it again, is Spark, and that is still in a free fall position. At what point do you help out? What point? Because if you ride a share all the way down to zero, then you've got no capital left and you cannot play anymore. So that's why, to me, having a trailing stop loss is very, very important. And it means for Westpac, hey, I did make a tidy profit. Thank you very much. So, and I'll take it. But anyway, let's take a look at the indicators. So let's take a look at the moving averages. 30, and you can see here, just with popping the 30-week moving average on, it's the Westpac has definitely come back to that 30-week moving average. We'll also pop on the 15 and just get an example of that as well. Oops. So there we go. Okay, the market or Westpac is trading below both the 30 and 15-week moving averages. On this basis, they haven't crossed yet, but they certainly are very, very close to crossing. And again, if I look at the bottom two indicators, the RSI, that's almost flatlined, but the MACD, the moving average convergence divergence, is definitely saying it's potentially on a sell side. Hey, it could be wrong and the market could easily turn around, but these are the things that I'm looking at. And the thing to remember too is just because you get stopped out of a share, it doesn't mean it's terminal. Okay, you can always go back in. I would recommend waiting. So for me, I'm not going to look at entering back into Westpac until it at least trades at that higher than the $38 level, which was the most recent high in this series. Okay, and it could quite well do that. It could do that, who knows, in a very short period of time. It could turn around quite quickly, and then definitely, yes, we'd be looking at entering again. Because as they say in share trading as well, you've got to follow the trends. If you're trying to be counterintuitive, there are people that have had a lot of success out of that. But for me, it's about following the path of least resistance. And if a market is rising, then great, let's jump onto it and continue on that wave, rather than trying to counter trend that and saying, oh, the market's going to fall. So like I said, I've been kicked out of this one, quite happy about it. And we'll just take a look at the daily as well. And you can see here that basically the 15-day moving average has crossed through that 30, and Westpac for the last 6 weeks, we've only had 6 days. We've only had one day where the market closed higher than it opened, but it has been trading down. So that's it for this week. I hope that's helped. A little bit different, rather than just doing a complete analysis on a share, actually showing you how that I have used my trailing stops and how that they actually work for me in this game of share trading. So if you want to learn more, if you'd like me to research a share, please reach out. Happy to help. That's what I'm here for. The more people we can help with their investing, the better. Until next week, take care.